And we're live. How you doing, friends? Ernie here. It is Thursday, June 11th. Finally, my brother's birthday is here. Boy, is he getting old. Fortunately, he doesn't watch this show. Anyways, today's topic is about something that you should know more about. Now, if you knew that what was the strongest performing sector since the beginning of the year, or even since the huge downturn, this huge downturn we had from the coronavirus pandemic, would you say it's technology? I mean, that would be a pretty good guess. Saying, looking at technology and the NASDAQ hitting 10,000, going up like a rocket. But you know what outperformed technology? What did better than technology? What what did in some cases 80, 120, 250%, or as a sector probably closer to about 40%? What was it? That's right. Kind of not any secret here. Gold mining mergers and acquisitions is going to be the big thing. Gold mining far and away outpaced every other sector. And there's a lot of reason to believe in the coming future that they will explode if gold breaks out of this current consolidation that it has. And a lot of people are talking about that as just an eventuality. And I agree with that. Now, while there's a lot of volatility in this sector, um, the general uptrend is higher and much higher. Gold may even experience a small pullback in the short term, largely because a lot of these miner and mining operations have literally been shut down. And you would think, well, okay, maybe that has something to do with the rise in gold. Okay, so there was less supply, less production, less future production. But it was also because of the drop in the the employment rate, obviously lower than it's ever been before. Incredible restructuring of our debt, huge amounts of money coming into the market, and that in effect has actually tempered the price of gold, even though it has gone up and kind of consolidated. A lot of volatility there. But all the while gold may have gone up just a small amount, miners, junior miners, royals, exploratories have absolutely taken off. And while as a sector, those were all really good bets, and we've done very well here at Asymmetric Advisors with those. Where the big money is in acquisitions and knowing which companies are most likely to be acquired by some of the majors and miners. When I say miners there, I mean MINORS, not ERS. Or mid-level, I should say mid-level mining companies. You got the huge ones like Newmont and Barrick and so forth. Then you have a subset of smaller, but still very large companies that are looking for opportunities to buy some of these fledgling junior miners. Now, why do you think that is a good idea? Well, I mean, if you were just to look at what has happened over the uh, past year, the past few months, I mean, Barrick has acquired Randgold, and Randgold got a premium of 16%, a little over 16%. Equinox took over Leagold, 23% premium was paid to Leagold holders. Argonaut bought Alio, a 49% premium. But those are the ones that are more well known. The ones that aren't so well known that we track, such as, hold on, got to get it out here. I got it on my spreadsheet. Sandstorm. Sandstorm acquired Mariana Resources. Now, there are lesser known reserves, exploratory things are still in development, but Sandstorm recognized a huge potential in there, acquired them for a premium of 84%. Or Orion Mines, Dalradian Resources, they picked up basically the same kind of story, picked them up with a premium of 62%. I could go on, but these are just this year. By owning a small piece of these, basically what might appear to some as penny stocks or just really cheap stocks, and look, you can own a whole bunch of these, and maybe many of them will never return anything, but who cares when maybe 20 or 30% of yours are returning 50, 60, 100, 200%? You don't care. First, knowing which ones are ripe, and we have some of our primary holds here at Asymmetric Resources. I'm not going to reveal them because those are proprietary to our members. However, this weekend, I am opening up our weekly webinar, our weekly strategy webinar to the members, to the public. So for the first part of that webinar, you can join along with our other members, totally free of charge. We'll talk about an outlook for the market. You'll be able to get some good technical analysis as well as some industry fundamentals, and you will get one of our picks. Now, this particular pick has already had an acquisition, all right? But we see this particular pick as maybe turning into a 5-bagger, maybe even a 10-bagger. That's 10 times your money. And by coming to the webinar, go to the link down below in the description. I will give you that pick just for showing up. I'm going to be doing this every week going forward. So the first half of our strategy session will be open to everybody. And then the second half will be for members only. And you'll have an opportunity to see what we do, actually get some actionable information. When I say actionable, you'll be able to take our research, use it for yourself, free of charge, and make money on it. All right? Now, of course, we're holding back all the other stuff, but this, I'm telling you, is a good deal. Now, if you'd like to join Asymmetric excuse me, need some water. Asymmetric Advisors as a full-fledged member, a yearly membership is very inexpensive. Matter of fact, your first trade, I'm willing to bet, the first position that you take on with us will easily pay for this year's, next year's, and maybe even the next 5 years subscription. That's how inexpensive it is. But in any event, come and check us out on Saturday, this Saturday. Go down and register below, and we'll talk about that. Now, the big story really, though, is gold mining. Now, we invest in more things than just gold mining. We're into natural resources. So we're into copper, lithium. Of course, lithium is going to be huge with the coming of electric vehicles. We also look at cannabis and e-gaming. All of these things are on our table. Now, e-gaming might be outside of the realm of natural resources, but it is so friggin' hot. It's hard to ignore. And we have some choice picks there as well. So consider it. Asymmetric Advisor. Asymmetricadvisor.com. And join us on our webinar this weekend, every weekend, Saturday at 1 p.m. Eastern Daylight Time. It's like a no-brainer, actually. So anyways, I wanted to highlight this whole coming gold mining mergers and acquisition opportunity. I mean, it is just simply too hard to ignore, and particularly with what's setting up with gold. Now, if you watch mining to any degree, gold mining, you'll notice that whenever gold goes up, mining, its beta is way larger than than the precious metal itself, and it goes up even higher, goes up faster. And consequently, when gold comes down, it also receives some of the same sort of brunt. However, when you start looking at these acquisitions, that's a completely different story. These acquisitions, even if gold goes up or down, the acquisition itself you make on the premium. And then if gold goes up, then it's a huge bonus. It could literally explode. But these acquisitions are really more based on the mining prowess, the quality of that mine, and how much gold they're actually pulling out of the ground, and what's their efficiency. And so that's what we choose them based on. And so that's why there's actually relatively little volatility on the downside and much more on the upside. That's why we call these asymmetric bets. You risk a little for the chance of making a huge amount of money. And that's why we call ourselves Asymmetric Advisor. We're an advisory on natural resources, taking advantage of the boom and bust cycles that are natural, whether it's in any kind of commodity. And that's what we do. And right now, like I said, we're highlighting gold mining because in this particular moment in time, it is hot. I'm looking at this chart, the gold chart. Let me go to that. And before I go to that, please take a little time, like this video, leave a comment, and subscribe. So what we're looking at is gold, and it's a huge move up really it's been since a whole year ago, since May of last year, June of last year. We've moved up, and then of course we had the big sell-off from the pandemic, and then moved right back up to this neckline area that I call the neckline, that blue range area. Starts at about 1750. Unable to break through there. Tried several times. Look at this. Tried 1, 2, 3, 4. Now a fifth time. Will we break through? Nobody knows. But I give the chances of it breaking through probably lesser than breaking through. And a lot of that depends on what's actually happening from a macroeconomic and even a macro political perspective. I mean, we have things like the race riots out there, the pandemic, getting this country back up and running. We have the presidential election coming up. We have all this stuff converging into one tight spot. And of course, gold is going to be affected. And of course, gold miners and these acquisitions are going to be affected as well. There's huge, huge opportunity coming up. I am not making the case here, nor, I just don't know, to tell you the truth. We've been sitting here consolidating now since the beginning of April, just moving sideways, just rolling around, and really on very, very low volume, that's the most surprising part. If you look at the volume profile, you can see that that's where some of the lesser volume of the profile over this past year has actually occurred, is in this very tight consolidation. Now, a lot of people will say, well, that is indicative that something big is going to happen, and that is true. Thing is that big consolidation, is it going to be a continuation of the trend or a pullback? That's what we don't know. And I think the gold market is really waiting to see how that's going to pan out. So that, my friends, is one of those predictions that I'm not really willing to commit to. And if I had to guess, I would say that there's a lesser chance that we're going to go up and through, a greater chance that we're going to go down. But I don't know if that's enough for you to bet on. But what you can bet on are these acquisitions. They're going to happen. They're happening all the time. Major miners, majors and mid-level miners are acquiring a lot of these mines that have shut down, stopped production, couldn't ramp up, couldn't make it, or have excellent enterprise value, incredible quality of the ore, fantastic management, but they need money or they can't get it. Can't get it in this environment. So what's the next best thing? Get acquired. get acquired, double, triple your net worth. And that's happening en masse now. So huge opportunity again. So I'm going to just leave you with that one last thought. That's my message for the day. Later today, we're going to have me and Don are going to sit down and have kind of a fireside chat on what's going on in the economy and where it's going. So look forward to that a little later today. But this is the message I wanted to leave with you today. Please sign up. Get your you'll get a really great pick. That is it 100% certain? I would say no, nothing's 100% certain. Anything can happen, but I would put it up in the 90 percentile that this pick is minimum a 3-bagger, almost definitely a 5-bagger, and very good chance of being a 10-bagger in the coming year, maybe 2 years. In the short term, I think it's going to move up. You'll see 30, 40, 50% return on this. No doubt. And if gold, now what I would suggest in this particular, from a strategic point of view in getting into it, and we can actually talk about that in the webinar, but I'll give you our strategy for entering speculative plays as opposed to investment potential plays, and how we enter a trade and look for better prices. But anyways, hey, hold on one second, okay? But anyways, that is the message for today. Again, sign up for the webinar below, and we'll see you later when Don and I have our fireside chat. Okay, where is that off button? There it is. Take it easy.